Hi, this is Kerry Artac with Artac Advisory, bringing you an update on the U.S. dollar index. This is actually the U.S. dollar index futures chart. I sometimes forget to mention that. It is not the raw cash chart. That would look identical to this essentially, but this is the US dollar index future, so it's tradable and it presently reflects the DEES 21 contract. I do a volume-based rollover, which is not a big deal when it comes to the financials, in particular the US dollar index futures. It's typically, the next rollover will occur the first week of December, at which point March will take over. So the difference between your traditional rollover and your volume-based rollover in the currencies is very minor. In any event, this is an update. You're probably familiar with this chart anyway. I did the last video a couple of months ago. The channel structure, the resistance, presently at 93.908, is a channel top that did contain highs back in the middle of August. We rallied to within 1% of that and have backed off since. And now the last couple of weeks, have been pushing higher again. And we may well retest that channel resistance. 93.908 rising exactly 0.017 a week. It is our ceiling that can contain buying through the rest of the year. Now that we've tested it, you can make a decent case that by the end of the year, we just might continue south to the 89.683 channel base. There is no indication of that. The indication for that would be violating a near-term channel bottom. I do need to zoom in a bit on this area to show that properly, and that comes in at 91.919 this week, the week of Monday, September 20th, rising 0.142 a week. So the reason I give you the rate at rising and rate of descending and so forth and so on is so that, I don't have to update these for you every week. You can actually determine the location of these structures through time. Now, I do need to update them every month or two just to see if there's anything new that's happening that needs to be mentioned. In this case, there really isn't. 91.919, rising 0.142 a week, able to absorb at least weekly, possibly monthly selling pressures when tested. So if we test it, say, by the end of September, it could contain selling through October, and from there we could rally back to that 93.908 resistance. But if we close below 91.919 or that formation at the end of any week, then we have a sell signal, a clear signal for bearish continuation over the following 2 to 3 months at the most, down to 89.683, the channel bottom. That can contain quarterly selling pressures if or when tested. And as I mentioned a moment ago, you could consider it a kind of a 3 to 5 month target anyway, now that we've tested channel resistance, but there's no clear sign for bearish continuation unless we settle below 91.919. And while we're talking about 89.683 as a possible target below 91.919, I must mention this long-term horizontal channel structure that goes back 5-6 years that we dropped to within 1% of last January is still there as a floor of support through 2022. And so if it is tested, and it's not considered a target unless we close below the 89.683 formation, and then should be realized within 3 to 5 weeks or so, 88.315 able to contain selling through next year. Now, we did, truth be told, have an actual bear market in the U.S. dollar, obviously, following that March 2020 high. And that sort of extinguished itself, if you will, following the January low of this year. And since then, we've been in this sort of two-sided kind of consolidative framework with meaningful, rotations upside and downside, several of them since January. We haven't backed off from that 93.908 formation in a meaningful way yet. And if we happen to settle above 93.908 or that formation at the end of any week, we have a meaningful 3 to 5 month buy signal. And I would expect a full channel extension up to that 97.983 area, which doubles the channel to the upside. And up in that vicinity, we also have a convergence with the low of the high, 98.345. And as memory serves, there's also a 5/8 Fibonacci retracement up there in that vicinity. If we close above 93.908 in the coming weeks, just know that a week, 2 or 3 to follow that. I'm going to have to let this go. If we do close above that formation, 93.908, we have a 3 to 5 month buy signal into that area that can absorb annual buying pressures if or when tested. I think that that's really all that needs to be said for this update on the US dollar index futures market for the week of Monday, September 20th.